This is Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. Your top stories this hour. Conservative U.S. activist Charlie Kirk dies after being shot at an outdoor event in Utah. Asian stocks set to edge lower after a U.S. rally drove stocks and bonds higher as an unexpected inflation decline reinforced speculation that the Fed will cut next week. Traders now looking ahead to CPI data later. We speak exclusively with UBS's Sergio Ermotti about the bank's options after regulators stood firm on its capital revamp. Plus, Sinovation Ventures chairman will be with us to talk artificial intelligence and China's development in AI.
This is a setup across Asia as we await the open. We have already seen Japanese and Korean stocks close at record highs. The Japanese yen holding pretty steady. We're watching also the offshore yuan, which is close to this year's high as well. We'll be watching Alibaba. ADRs fell in the overnight session. They're seeking more than $3 billion in this year's largest convertible issue. They want to raise funds for everything from expanding international commercial operations, not to mention, of course, scaling up their data centers. And you can see Sydney futures at the moment. Early in the session, futures down 0.25%. But take a look at how U.S. futures are also setting up, because we saw stocks continuing to rise to record highs. And it's really that AI trade momentum that we're seeing, with big tech really leading the gains. NASDAQ 100 futures also seeing a little bit of upside. S&P futures not doing much at the moment, but we continue to follow the geopolitical tensions in the Middle East as well, with crude prices at $63 a barrel level. And of course, all to do really with bigger picture demand outlook for the world as well. We got the producer price inflation numbers out of the United States, and really surprising to the downside. We're talking about inflation in wholesale prices falling for the first time in 4 months ahead of the CPI numbers. So we're joined now by Bloomberg's digital politics editor Romy Verghese in California, also MLive strategist Mark Cranfield in Singapore for the latest on these numbers. Let's start with you, Romy, because when it comes to the PPI numbers, really we didn't see companies pass that cost coming from U.S. tariffs as much as we had expected to consumers as well.
Yes, that was the key development here in this report, and it really shows how companies are hesitant to raise prices because consumers have been so buffeted by economic uncertainty, by the slowdown in jobs. It shows how careful they are in being able to hike these prices. And this is going to be a question for the Fed. I mean, they generally expect tariffs to push inflation higher, but is this going to be a one-time thing, or is this going to, last quite a bit? And this is something, we expect to hear more of next week when the FOMC meets.
Mark, let's bring you in. So we have the path of the Fed, we have Fed independence worries, and then the 10-year auction that went quite well. What are you seeing in the curve steepening? Has it peaked? What is this going to mean for a really popular macro trade this year?
Yeah, we're probably beginning to enter a period where people are just grabbing as much yield and duration as they can. I think what you're seeing playing out and the PPI numbers underscore this narrative that when the Fed lowers interest rates, it's not one and done. There's going to be more to come here. This is probably going to be 2-3 interest rate cuts in a cycle. And you can see this Treasury rally has started to pick up again. The market in a very short term, people positioning-wise, they're probably a bit overextended in terms of Treasuries. But you can see they're beginning to go further out the curve to try and grab what's left of yield before the Fed lowers interest rates even further. So we'll probably see the 30-year pretty well supported today. Even if the CPI numbers are slightly hot, you'll just see a knee-jerk reaction. It's probably not really going to derail the market all that far. And then we've got the Fed meeting, as Romy was saying, next week. The language from that meeting is probably going to put people in a place where they would expect this interest rate cycle to continue for some time.
And of course, we have the Bank of Japan policy decision as well here, and we're contending with JGB auctions on this side of the world as well. So, Mark, when it comes to the broader bond markets and perhaps all of these economic numbers that we're going to see in the next few days, what will be key to you?
We've got the European Central Bank today. That's certainly going to give us an indication of where they stand. We're expecting rates to be on hold, but the signalling from there could well be that they see a protracted hold. So from the European point of view, that's going to put an anchor underneath European yields. That's been one of the volatile sectors, particularly because of France, change of leadership there in France. They're trying to get their budget passed. That's caused quite a lot of volatility at the long end of the curve, which has also brewed into Japan and other parts of the world. Japan is settling down nicely as well. There's been stories saying that the BOJ now is fairly sure they can get an interest rate hiking before the end of the year, which in effect actually is helping to stabilize the market, because people have been looking for that for some time. It's fully priced in. There's no doubt about that. The market can absorb a 25 basis point hike. We saw the 5-year auction go very well this week. So things are falling into place where it looks as though long-term yields around the world are peaking. The Treasury market is helping that case as well. So now it's a question of whether or not people get serious about flattening that could be driven by the European decision today. There's plenty of downside to get the yields steepen so quickly around the world that certainly that could become a theme. If people are confident that generally interest rates are peaking in the long end, flattening could become the next thing that we see going on.
Especially with some of the tariff uncertainty out of the way. Romy, in the meantime, though, we are hearing how Mexico is planning 50% tariffs on some products, including Chinese products.
Yes, we have been reporting about this for some time, and this has been expected because the U.S., Canada, and Mexico are about to embark on a review of their free trade pact. And this sort of move to increase tariffs on China is something that the Trump administration really, really wanted. They really want to see this because, Mexico has become a top destination for cars from China. And Trump has said that these cars, they're in Mexico, they end up in the United States. So this kind of appeals to the Trump administration. I mean, obviously, these tariffs still have to be approved by the Mexican government. But yes, we were expecting this sort of appeasement of the Trump administration, especially as we head into this review period for this free trade pact.
Mark, this also comes along with how Chinese stocks have been doing in spite of the odds. And we're seeing Alibaba as well, perhaps opportunistically, this really chunky convertible bond offering.
Yeah, the market will need to digest. There's a very large $3 billion in a convert from a company as impressive as Alibaba is going to be a big deal. People will take time to absorb that into the market. So it wouldn't be at all surprising if we see Hong Kong stocks a little bit lower today as people distribute that money around the market. But it will be an opportunity for people to look into rotation plays. There have been a number of stocks which have been lagging behind, and people will start to think, because Alibaba has been a key driver of the market for the past few weeks. The stock has been doing extremely well on its AI-driven themes. So it may well be that people use it as an opportunity to move into some of the laggard sectors. In the very short term, it'll probably take a couple of days to absorb all that amount of money that Alibaba is taking out. But once that's out of the way, the Hong Kong stocks and China in general are being driven by both sides of the equation. They like the story coming from the US, lower interest rates. They also like to see the fact that China is supporting its economy and doing more to support its securities markets as well. So from both points of view, and you've got a strong yuan into the equation as well. So the story probably has further to run, and it probably will go on for a few weeks. But yes, of today, you can expect to see some turbulence in Hong Kong markets.
Longer run, multiple tailwinds for these Chinese stocks. Mark, thank you. And to Romy as well, Bloomberg's digital politics editor Romy Varghese and MLive strategist Mark Cranfield. Great to have you both. Now, the annual UBS Disruptive Technology CEO Summit begins in Hong Kong today, bringing together industry pioneers and startups to discuss the latest advancements in tech. Let's cross over to Hong Kong, where the China Show co-anchor David Ingles is standing by with the bank's CEO. Dave?
Yeah, good morning, guys, and thank you for giving us a bit of time and space on your shows. And I'm glad that you guys talked about that Alibaba deal, because that really underscores this, I guess in many ways, this renewed vigor, this new vitality that's certainly taken over Hong Kong equity markets. Alibaba hasn't traded at this price in about 4 years or so. So a lot of these sort of big themes around AI, China, and how quickly things are actually advancing will be front and center of investors' minds. And there's no better person really to talk us through all these things than, of course, the UBS CEO Sergio Ermotti, who's here with us exclusively, of course, as we get underway with this conference. Good morning, and it's very nice to see you.
Thank you. Good morning.
In the region. What are you looking forward to? This entire event about disruptive technologies. How is the bank looking to get involved here?
No, it was great to be back in Hong Kong with all the executive board and the board of directors for a full week of sessions, and now we are also hosting our 11th event here on disruptive technology and gathering 1,000 clients and really at a pivotal moment for the sector. I think that we always saw a lot of innovations, particularly coming out of Asia, but now the acceleration is huge around AI, around robotics, and so we're looking forward to engage with clients.
Right, and I think you and I were just talking before we started here that people tend to overestimate in the short term how quickly things can change. But I think in this case, things are rather moving fairly quickly as far as this technology goes. How is your team looking at opportunities for the bank here, internal or external?
Yeah, it is fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
Right. And, all of this is taking place, and I want to ask you a bit later on about the process and the updates on the integration, of course, of CS. I believe you're 9 of the 13 billion in. I think we'll get to that in a moment. Can I ask you, though, about maybe one of your favorite questions, which is about FINMA? And, well, not to speculate, but where are conversations now? Let me give you the mic on that.
Well, I mean, there are no real conversations. There is a political process. I think that the regulatory authorities are part of this process. We have now a consultation process on the proposals of the Swiss government to make some changes to the regulatory framework. We do accept that there is a necessity to fine-tune many aspects of regulation in Switzerland, but on capital, I think the requirements that are proposed are excessive, and they are not really targeted to address what happened at Credit Suisse. So we are engaged in the public debates, and in the next few quarters we will see some outcome of the political process.
My understanding is any new regulation will kick in about 1.5 years, give or take. And you have, if in fact in its current form it does kick in that way, then the bank has a few years to then adjust. I guess my question is, does this really affect how you plan the business short term, given that this is a multi-year process anyway?
No, look, short term, we have been very, very focused in staying close to clients, in navigating a fairly challenging macroeconomic, geopolitical environment with also volatility and changes affecting our wealthy clients and our clients across the board, and institutional one as well. So we are very busy in finalizing the integration and also, as we mentioned before, on AI and technology, preparing for the future. So, of course, this debate on regulation is a huge distraction that we try to minimize as much as we can from a client-facing standpoint of view and day-to-day.
I mean, speaking of your ability to deal with your clients, I think one of the things that you've mentioned before, that shrinking the bank is not something that you prefer. Yeah. That the franchise is Swiss-based and your global franchise gives you that competitive advantage. The reason I frame it that way is I wonder, and risking oversimplifying a complex issue here, Does the regulation in some way handicap the Swiss competitiveness when it comes to banking?
Well, of course, when you have a proposal that would see our bank having to hold, 50% more capital than your competitors, then of course you would have an impact on that. But it's difficult for me to see a successful global organization that is very close to clients, that is very resilient and strong in terms of capital, embracing a strategy of shrinking as a good way to succeed in the future. So we are very focused to keep our global footprint. Diversification is a very important factor. Right. If you look at our franchises in the US, in Europe, and particularly in this region, they are a core strength. So we believe that international footprint and business diversification should be maintained going forward to really also respond to clients' demands.
And the message you would give to investors, clients, employees that, hear this almost on a regular basis, concerns around the bank shrinking and whether or not that's fully under your control. What is the message that you're able to give at this point in time?
Well, I think that we and the board of directors and the executive board are very determined to continue to execute our successful strategy, and shrinking is not an option.
How about the headquarters, the conversation there?
No, but we want to continue to operate as a successful global bank based out of Switzerland. I think that we believe we can offer a lot to our Swiss clients and international clients by operating in this way, and we believe that we are also through that a good factor for the Swiss economy.
Right. The management committee and yourself wouldn't be doing the job if you weren't planning for Plan Bs or Plan Cs. And not to speculate, of course, but what are some of the worst case scenarios that have been gamed out in the event you need to start entertaining some of these options?
Well, the worst case scenario is quite clear. It's already on the table. So I think that one is a scenario that we will need to evaluate and understand, but is definitely too early to jump on commenting any potential scenario and what our responses will be. Of course, the requirements as they are very punitive and excessive, and therefore we would need to think about how to protect our shareholders and our stakeholders' interest.
Understood. And I think just to clarify that point, because in my head there are two things here. It's either you set aside more capital or the headquarter question. I know that's oversimplifying the equation here, but do I take it then that you would rather put up more capital than move the bank out of Switzerland?
No, I mean, look, our preferred option is to have a reasonable outcome of this regulatory changes that is addressing the true lessons learned from what happened at Credit Suisse, and not simplistic options. And we want to continue to operate out of Switzerland based on that kind of regime. So I think that this is our focus. This is where our energy goes, and we're not going to get distracted by further other debates.
Right. On that point, final question on this. Do you get a sense that regulators are open?
No, I think that regulators and the government have made their proposals. I think that now is up to the parliament to go through the process in assessing how they want to tackle this. And so far we see that there is a willingness to debate the topic, and so we remain optimistic that something reasonable can be achieved.
The other big thing on your plate, among the many things I would imagine, the integration. I think you're, correct me if I'm wrong, 9 billion into the 13 billion in.
Yeah.
By the end of this year, where do you think that number goes?
Well, I think that we're going to, clearly the last 3 billion plus will probably get into 2026 as we complete the integration, because we are still migrating more than 1.2 million clients in Switzerland. 400,000 have been migrated. Another 500,000 clients will be migrated before year end, and the last chunk will be early next year. only then we can switch off data centers, IT systems, duplication, because in Switzerland, contrary to this region, for example, or the US, we are still running two large banks. From an infrastructure standpoint of view, from a client-facing standpoint of view, it's already one bank.
Okay.
And so as 2026 will be the final year of the integration, and then from 2027 onwards, we will continue to focus on our future. UBS has 170 years of history, and so we're gonna, we are preparing also for that next chapters.
And the bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change, and then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum, and of course also China may be impacted by high tariffs, but on the current assumptions around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the US. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the US, we will need to see exactly if there is an inflationary aspect of tariffs. And
is that still unclear at this point?
I think it's unclear because a lot of in anticipation of tariffs, a lot of people have been exporting and anticipating, and the exports or imports from the rest of the world into the US. So the kind of tariffs we see right now, which is 7-8 times higher than what we had at the beginning of the years. I mean, if you look at Europe at 15%, and is 7 times higher than what it was. The dollar also depreciating 10%. Has a big effect on the economy. So it's going to be challenging for Europe. In the US, we still believe that growth will be there, but the inflation questions and how it plays out into the central bank policies remains open.
Well, when you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their capex spending, and just their broad expectations of how things will play out? Well,
I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology driven. There is a clear boom and prospect for growth. We see it here in Hong Kong with the booming IPO market. This is something that we saw in the best times.
Right.
And but in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. Is keeping all of us very focused on making sure that we are not becoming complacent.
Well, speaking of this booming IPO market, it's something we haven't seen in years, let's put it that way. At least our team as well feels extremely busy every day. There seems to be a deal of fundraising, a stock rights offering, what have you, almost on a daily basis. Are you satisfied with how your deals team has come up to the task of this boom in activity here in this part of the world?
Absolutely. I mean, it's extraordinary to see. I mean, if this is tenfold, 7-8 times higher volumes that we had at this point in time last year. I'm very happy. We are one of the leaders with more than 10% market share. Very happy to see that momentum. But it's quite impressive to see how the mood has changed compared to a year ago, and so it's which shows the flexibility and the agility of the economy in this region to respond and react to market changes, and the driving force of innovation that stays behind it.
Right, and there's this renewed, let's put it, a healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this new regime?
Well, I don't remember in my career times in which competition wasn't fierce. Look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that wants to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.
Mr. Ermotti, I have a lot more to ask you, but we're out of time. Thank you so much for taking the time this early in the morning to join us here. Sergio Ermotti there, guys, UBS CEO, joining us, of course, they have a big conference taking place here in the city. We'll have more, of course, from the conference itself throughout the course of today's programming. Shery, back to you in Tokyo.
Yeah, David Ingles there in Hong Kong with that conversation. And as he mentioned, we do have plenty of coverage coming up from the UBS Disruptive Technology CEO Summit this morning. Sinovation Ventures Chairman joins us to talk AI development in the next hour. And later, we talk growth strategy with Hummingbird Bioscience. Plus, VC firm 3CAGI tells us what investment opportunities they see in Asia.
Yeah, and speaking of some of these opportunities in Asia, let's take a look at how futures are faring. For the moment, we could see a bit of a pullback. Nikkei futures not really doing much, but of course, this is following on from how U.S. stocks did really well overnight. We're seeing futures in the U.S. pointing to some upside. This following on from the PPI numbers, which showed an unexpected drop. This was the first decline since April. Thus, this raised broader concerns about the lack of demand in the U.S. economy, or the inability for businesses to pass on higher costs to consumers, notwithstanding also about the CPI data that is set for tomorrow, and how it looks like 25 basis points by the Fed, a cut, is a lock for next week. The question becomes also what we see for October and December, though we are seeing markets more or less pricing in these 3 rate cuts for the rest of the year. Shery.
Yeah, I mean, it's really a tricky situation for central banks around the world, right? We have just heard from the RBNZ Governor Christian Hawkesby also talking about how it's been a very challenging time at the RBNZ. We do get the Fed decision next week. We get the Bank of Japan decision as well. More than 80% of economists surveyed by Bloomberg think that the Bank of Japan will hike rates this year. We are expecting also producer price inflation numbers out of Japan in just a few minutes. We have more ahead on the Asia trade. This is Bloomberg.
This is a dark day for our state. It's a tragic day for our nation. And I want to be very clear that this is a political assassination.
Utah Governor Spencer Cox telling reporters that conservative U.S. activist Charlie Kirk was killed in what he believes to be a political assassination. One person has been detained after the shooting. Kirk was a close ally of President Trump, who has ordered American flags to be lowered to half staff until Sunday. Let's bring in Kate Sullivan in D.C. Kate, what do we know so far?
That's right. So we're really seeing an outpouring of messages of condolences and prayers from many different people within the White House and across the broader Trump administration. The president called Kirk legendary and said nobody understood or had the heart of the youth in the United States of America better than Charlie. Charlie Kirk was really a fixture on the campaign trail. I saw him at countless events across many different battleground states when I was covering the Trump campaign last year. He founded Turning Point USA, which is focused specifically on promoting conservative politics on high schools and college campuses across the United States. So he would regularly host events on college campuses. I also wanted to note that, before the official news that Kirk had died, J.D. Vance had actually posted 3 times about Kirk after the news of the shooting. He posted a photo that he had taken with Kirk. He urged people to pray for him. He said that Kirk, would answer any question and talk to anyone. So I think you're seeing really the close ties that many people in the administration had with Kirk and the Republican officials as they're really reacting to this horrific news.
Kate, in reaction, it's sort of united both sides of the aisle as well. But talk to us about the scrutiny this is raising about security and political violence.
Absolutely. I mean, I think there definitely, as we've seen over and over again, an event like this is becoming all too common. I was actually at the rally where the assassination attempt on Trump happened in Butler, Pennsylvania. And so, I think we saw with the Minnesota lawmakers as well. We're really seeing a reaction from Democrats and Republicans both on this. One person that I'd also point out is California Governor Gavin Newsom. He's a prominent Democrat. There's a lot of buzz about him potentially running for president in 2028. And he was on Charlie Kirk's podcast. The two of them sat down for a conversation. They both posted the conversation to their respective podcasts. They're both obviously on the very far ends of the political spectrum. He called the attack on Kirk disgusting, vile, and reprehensible. In the United States of America, we must reject political violence in every form. You're hearing a lot of the same messages from Joe Biden, Kamala Harris, Barack Obama, and many, many others.
You mentioned how he could have potentially run for president. Are there any political implications involved with this?
It's a great question. I think, it's too early to tell. I think right now the message has been one of thoughts and prayers, something that we've heard many times after shootings. The sort of political reaction is first and foremost to talk about the prayers and the condolences for the family. And then there certainly will be a conversation. It's just unclear whether it's going to actually yield results, because we've seen this over and over again in the United States. There are conversations and debates that happen, and then it does not necessarily lead to action or changes with gun laws.
Kate, thank you very much. We appreciate you running through all this for us and providing this much-needed context. Our reporter, Kate Sullivan from Washington. Now, Mexico is preparing to impose tariffs of up to 50% on cars, steel and textiles imported from China and other countries with which it does not have a trade agreement. Economy Minister Marcelo Ebrard says the primary goal of raising tariffs is to protect jobs. For more, Bloomberg reporter Maya Avril joins us from Mexico City. So, Maya, we're seeing quite interesting the timing of the announcement by Mexico, because comes ahead of U.S.-Canada talks. In what way does this perhaps align with some of the pressures that have come from the U.S. president?
Well, we know that President Trump has raised concerns even since last year, before he entered the presidency again, about Chinese goods coming through Mexico and potentially being imported into the U.S. And while some of those concerns were unfounded, Mexico has continued to face pressure from the U.S. to make changes to its trade policy. We reported back in August that these new tariffs were a possibility, and now they were confirmed ahead of what you mentioned, the talks about the review of the North American Free Trade Agreement, but also in line with Mexico's budget for 2026 that was presented earlier this week.
So what are some of the other countries that would be affected by this, and what are the implications for broader trade?
Well, this tariff is going to apply to all of those countries with which Mexico doesn't have a trade agreement, right? So that excludes the US, it excludes Canada, but it also is going to apply to South Korea, to India, and to many other countries around the world. China has become a particular focus because of steel, autos, and also goods such as textiles and furniture that come from there into Mexico. And so that has been part of the focus. It's also where we see a higher tariff, right? Mexico is raising the rates for cars from 15 to 20% up to 50%. It's trying to follow WTO rules. But it does want to try to make a kind of offering to President Trump in the US to show that it's responding to some of those US concerns. And it seems like it's trying to protect the relationship that it has with the US, which is its biggest trade partner, as well as Canada, before those countries start talking about what their free trade agreement will look like going forward.
What does this tell us about the sort of common bloc that is being formed against China, though, Maya?
I think that President Claudia Sheinbaum in Mexico, who is in her first year in government, has tried to be very diplomatic until now. There have been much smaller moves against some Chinese goods and a rhetoric against some of the Chinese shops that sell imported products, whether it's electronic products or plastic products. There have been some raids on those and the allegation that some of those goods were improperly imported and didn't pay the due tax. But this is a much bigger escalation that we hadn't seen before, and a message from Mexico that it's really aligning itself much more closely with the U.S. under Trump in order to crack down on some of these Asian products. We know that the U.S. and Canada have taken actions previously to try to limit the entry of Chinese cars, and that's where Mexico is also now making a move. Obviously, though, it's not only going to affect Chinese automakers. Companies like General Motors, Ford, and Stellantis also produce cars in China and then have them exported to Mexico to have cheaper models that are then sold locally here. And so we're waiting to see across the board what this impact might be.
Bloomberg's Maya Avril there joining us from Mexico City. Now, Nissan is one company that also operates in Mexico. We'd welcome the U.S. and Japan reaching a deal to reduce tariffs on vehicle and parts imports to the United States. But challenges remain in managing those levies alongside a costly business turnaround plan. CEO Ivan Espinosa spoke exclusively with us about the impact of tariffs and the progress of his restructuring efforts.
We welcome the improvement from the 25% to the 15%, but as you rightly said, it's still higher than what we were operating with. And what we're doing is continuing our efforts. On one end, we are focusing our marketing efforts on tariff-free products. So we have two big manufacturing sites in the north, in the United States, where we produce many Nissan products: Pathfinder, QX60, Infinity. We produce Murano. We produce our Frontier pickup, Nissan Altima. So we have enough product to sell to our customers tariff-free, and this is where we're focusing our marketing efforts. On the other end, we are also continuing our efforts of resourcing some components to improve the tariff impact that we're receiving from some suppliers and tier-end supplier impact, and we will continue the efforts moving forward.
Does that mean that you won't necessarily need to raise prices, and does that improve the demand outlook for the U.S.?
Well, we're keeping a close eye on what's happening in the pricing, and we will take any opportunity that we see coming. Nissan we are having a very quick follower strategy on pricing, so monitoring what our larger competitors are doing, and we will take opportunities as we see fit.
The Chinese market, very competitive. How are you faring, and what's the strategy there?
Well, we see, I would say, a prudent improvement, or what I will call we have prudent confidence. This is how we're qualifying it, because we have 3 months of year-over-year sales growth. We just launched our N7, which is a new energy vehicle that was designed, engineered, and is produced in China. And this car is helping us drive the performance up. So We have, as I said, 3 months year-over-year growth, and that's why we are prudently confident, because the performance is good. The market is very difficult, as you said, so we cannot, say we are already out of the woods. We still need to continue working, but we have more cars coming in the pipeline, cars that were produced, designed, and engineered with the Chinese customer in mind, and we're confident that they will keep us driving the success forward.
How are you doing on your funding plans? We understand that you were trying for yen 1 trillion when it comes to debt and asset sales. How much progress have you made?
Well, we raised recently around 850 billion yen already. So what I would say is that we are very well in track on the funding. This gives us a lot more breathing room to keep working on the Nissan plan, keep improving our performance, and we have a lot more runway than what we had several months ago. Yeah, and the good thing is it's showing the confidence of investors in the plan. The fact that they were ready to place this amount of money on Nissan is proof that the plan is solid. It's a plan that is robust, and that management, we were able of convincing the market with our strategy. Yeah.
On the details of how those funds are being raised, we heard about a syndicated loan coming from backed by the UK. Is that included?
Is not included in the 850 that we have raised already. Yeah.
But conversations with the UK are happening.
We're looking at many options all the time, and we'll let you know if there's anything to add later on. Yeah.
What could be the timeline for that?
At the moment, we are not in a rush to raise any more funds. We have, as I said, we have raised 850 billion yen, which is a very big part of what we had intended to do, and we are confident with this amount for the moment. Yeah.
What about asset sales, especially these offices here in Yokohama?
Well, nothing to add on that. We initially looked at many options, but we haven't decided anything. We are in Yokohama, and we will be in Yokohama always.
When it comes to the production here domestically in Japan, you are ending them in your flagship Oppama plant by 2028, right? Are we going to see any more closures or reductions here domestically?
Well, in Japan, as we announced, as I mentioned in the last announcement, we have finished with the vehicle production consolidation in Japan. Nothing else will be done on the vehicle consolidation side in Japan. We're still working on some other sites overseas. We announced also Cuernavaca, which was also a very difficult decision to do. But we are on track. We are almost done with the restructuring plan, and we are now in the stage of moving forward to the future, talking about product and launching all new cars here in Japan and overseas.
What happens to those plants, like the Oppama plant?
Well, we will see what we do to repurpose them in the future. Nothing to announce at the moment.
Repurposing, but not necessarily selling it.
We're open to many options. Yeah.
How's your partnership with Renault? The new CEO especially, he was saying he wants to see more partnerships globally.
Of course, I think, this time is one of the most exciting times for the alliance. From the outside, it looks like we are distancing from each other, but the reality is this is a time at which we are collaborating the most. We have so many cars coming. We started with the Renault 5-based Micra that we just launched, which was designed by Nissan, but is now produced by Renault. And this is just the beginning of several projects that we have been working on. And I've known Francois Provost for many years. We've been working together for quite a while. And we have both the same interest, which is keep building, win-win relationship between both companies and keep fostering the alliance for the future.
Nissan Motor CEO Ivan Espinosa speaking exclusively with Shery. More ahead on the Asia trade. This is Bloomberg. Yonhap says a flight home for South Korean detainees in the U.S. has been scheduled for Thursday afternoon after it was earlier delayed. Officials have sought assurances from Washington that workers will be allowed to leave without restraints. And for the latest, let's bring in Seoul Bureau Editor Danny Thomas for us. Danny, what do we know about the delay? What sort of assurances is South Korea seeking?
Yeah, so I think the main concern was about their ability to return to U.S. and there was lack of clarity on how they will be treated once they want to go back to the work plan. So I think those were the discussions that being held, and it appears that now there is more clarity. And once they're back home, whenever they want to go back next in and complete the work on those plants, these workers will have at least that seems to be the assurance that the U.S. is giving, that there won't be any problems getting back into the country. So then that was a big part of the discussion, and that resolution seems to be being achieved. So we're hoping that this plane will take off tomorrow noon U.S. time.
And that's the thing, right? Assurances about what happens next, especially given that Korean companies are supposedly investing hundreds of billions of dollars into the United States. What can we expect from Washington?
I think when Foreign Minister Che was leaving for DC, I think there was a lot of expectation that there has to be a firm message, given that these kind of episodes will not repeat, and the visa issue needs to be resolved if South Korean companies want to continue to invest in America. So I think that assurance is kind of what the industry wants here. And to what extent that we get is unclear. As you know, H-1B is a kind of a lottery, and the short-term visas that a lot of the South Korean companies have relied on has now become pretty tricky. And a lot of the employees we spoke to, they are pretty concerned, and they don't want to get into this kind of mess again. So unless there is a real path for these employees to be safely working on a proper document, you will not see a lot of people willing to go based on what happened last week. So companies are in a pretty tight spot now that they can't force their employees, and unless they get the written commitment from the US government that these kind of episodes will not repeat, I think you will see a lot of repercussion and fallout from this into the new investments that is going into US.
Danny, the whole detention issue has caused a lot of anger back home in South Korea. We're also waiting to hear from the president on marking his 100th day with a speech. What are we expecting to hear from him?
Clearly, the whole 100-day speech now is taken overshadowed by this incident, and he has been pretty careful in terms of how he characterizes and how he wants to deal with it. But you'll expect some kind of harsh words without breaking the whole diplomacy. Domestically, people want to hear that South Korea is standing with its employees and wants a very clear commitment from US that the money that goes into the country will also means that the people will treat it with dignity. So I think he will expect some harsh words there, but also he wants to make sure that the tariff regime is the trade agreement they have negotiated has yet not been signed by an executive order. So he doesn't want to torpedo any of that. So there will be a bit of a diplomacy dancing around, but you will hear pretty firm words from President Lee today.
Yeah, we'll continue to watch also what company CEOs across South Korea have to say, given that they're the ones also making billions of dollars of investments into the United States after the U.S.-South Korea trade deal. Bloomberg Seoul Bureau Editor Danny Thomas there with the latest from South Korea. We are also getting breaking news out of Japan. We are now seeing the producer price inflation coming in at growth of 2.7 for the month of August, as was expected. This is a slight acceleration from the previous month. When it comes to the month-on-month numbers, a contraction of 0.2%, a slightly higher contraction than was expected, also falling into contraction territory from a slight expansion in acceleration in the previous month. Of course, we continue to follow the PPI numbers and perhaps some indications of where consumer inflation is also going in Japan. We have seen a survey of more than 80 economists saying that the Bank of Japan will raise the rate to 0.5% by the end of January, October being the biggest bet right there. But we are expecting the BOJ policy decision next week to not necessarily move the needle right now. PPI year-on-year growth of 2.7% for the month of August. This is Bloomberg.
And we're also counting down to China markets open. We'll be watching Alibaba stocks this morning after the firm moved to raise about $3.2 billion through an offering of zero-coupon convertible notes. The offering is set to be the largest this year. According to the terms of the deal seen by Bloomberg, the notes will convert into ADRs. Alibaba plans to use the funds to scale up its data centers and expand its international commerce operations. U.S.-listed shares of NIO fell sharply on Wednesday after the Chinese EV maker announced it had raised about $1 billion through a share sale. The company took advantage of its recent stock rally to fund growth, with shares climbing more than 40% since mid-August. NIO says it'll use the proceeds to develop future vehicle platforms and models, expand its battery swapping and charging network, and invest in R&D. Shery.
And Avril, Oracle was again in the spotlight during the Wall Street session. This after the Wall Street Journal reported more details on a major deal between the company and OpenAI. Let's bring in our Asia tech correspondent Annabelle Drewlers joining us from Taipei. Annabelle, what more can you tell us about this?
Yeah, so it's all about the cloud contract wins. So as you were saying, I mean, it's really been in the spotlight this week. We had the company talking about its outlook, also what it had done over the past few quarters, but signing these multi-billion-dollar partnerships with a few different companies. So Bloomberg had previously reported that one of those companies was OpenAI, and we saw, for instance, during the results, the company talking about this deal that would be 4.5 gigawatts worth of data center capacity. So you're talking about enough energy here to be powering millions of American homes. But the Wall Street Journal as well, during the intraday session on Wall Street, had more details on that, and they're giving a value of that deal in question, and they're saying it's worth $300 million over a period of 5 years. So this is really significant, of course, very significant for the company and its evolution from a company that was really once focused on database software, and now really moving into this cloud computing space, coming up against the likes of AWS, for instance, other cloud companies. But the big thing as well was also what that meant for the stock price. Yes, that big surge, but also for founder Larry Ellison's fortune. I mean, you're talking about a surge of $90 billion or nearabouts during the session, briefly topping Elon Musk as the world's richest. There's only $1 billion now that separates them, even as Larry Ellison fell back to number 2.
Yeah, $90 billion one-day wealth boom against the backdrop of this $300 billion deal between Oracle and OpenAI. Bell, thank you so much. Annabelle Drewlers in Taiwan for us. Markets open next in Sydney, Seoul, and Tokyo. We'll check in on that. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after another record high on Wall Street. And of course, we are really factoring in expectations of a rate cut by the Federal Reserve. This Avril, after we saw the PPI numbers declining, surprising to the downside for the first time in 4 months, and all of this ahead of the CPI numbers as well.
Yeah, and Bloomberg Economics sees a brisk uptick in the CPI numbers, but not necessarily because of tariffs, but rather the loosening or easier financial conditions. So it'll be really interesting to watch for that data, Shery.
Yeah, we'll be watching those services prices perhaps driving that CPI number. Here in Japan, we already had the PPI data out just minutes ago, a growth of 2.7% for the month of August, coming in line with expectations, and of course a deceleration from plus 4% earlier this year. Very important numbers when it comes to also how we will factor into CPI numbers. We do have the Bank of Japan policy decision next week. We have seen economists surveyed by Bloomberg, more than 80% expecting no moves next week, but perhaps a move within the year, most thinking that perhaps it could be in October. Take a look at the open, the Nikkei gaining a little bit of ground, a little bit of divergence with the topics right there, but the Japanese yen holding at that 147 level against the US dollar. We are watching JGBs. We had a very strong demand when it came to the 5-year auction, the strongest since June, and of course we are already seeing a very steep yield curve when it comes to the Japanese market. Take a look at how South Korea is also coming online. We are getting those September export numbers for the first 10 days of trade, we're talking about a gain of 3.8% year-on-year. This is a very early number. When it comes to the imports number also, it's a rise of more than 11% year-on-year for the first 10 days of September. The Kospi gaining 0.7% at the open, while the Korean won is holding steady. We have seen a big upside for the South Korea market. We're talking about more than 30% this year already. So we're around record highs already. Japanese stocks were also at record highs, and we continue to push higher, Avril.
Yeah, and Shery, it's really after that PPI data that you highlighted that's potentially influencing what markets expect for the path of the Federal Reserve. We interestingly saw actually pretty solid demand for 10-year debt in the U.S. And does that put into question what's been a really popular macro trade this year, curve steepening? Are we talking about curve flattening a bit more, or that trade has sort of peaked? So we're seeing on the 10-year a bit pulling back. We're seeing the yields rising towards that 405 level or above that 405 level for the moment, keeping tabs as well on oil prices, a number of geopolitical moves with Russia's incursion into Polish airspace. After a week already that we saw earlier, a couple of days ago, the Israelis actually attacking Hamas leaders in Qatar. Does that edge higher on the geopolitical risk premium? At a time when OPEC Plus is bringing more supply into the market, you've got to wonder how much those oil prices are going to be capped. Looking at the Australian Open, we're seeing Australia stocks pulling back from yesterday's recovery just a little for now. Shery.
All right, Avril, let's bring in Ben Powell, Chief APAC and Middle East Investment Strategist at BlackRock Investment Institute, joining me today here in our brand new Tokyo studio. So welcome.
Thank you. Great to be here. The studio looks beautiful.
Thank you so much. So what do you expect to be the biggest mover of the markets in the next few days? Because we have seen Avril talk about all of these geopolitical risks, trade risks as well. And of course, you have monetary policy as well.
Yeah, I still think it's artificial intelligence. So we still have the super boom.
And I did not even go there yet. Yeah.
It's unavoidable. So the news this week, I guess, around Oracle's sort of conveying to us as market participants that we're still not bullish enough about AI underlying demand. So specifically, I guess Oracle was about the excitement around inference as well as training, so we can cut the cake in different ways. But the AI boom continues and is likely to be the dominant driver of risk over the medium term. Today, we've got CPI, which is certainly relevant, but if you want me to stick to one, it continues to be the AI megaforce, as we call it.
Which is really interesting, because earlier in the year we thought because of DeepSeek and these cheaper models that wouldn't be the case anymore. Right. So that narrative is completely gone.
Yeah, look, we were clear, I think, that the demand was very huge. So DeepSeek was very interesting in that it kind of posed the question, can we just be smarter about using the pre-existing infrastructure? And it seems like we need both. We need more, we just need more scale, and we want to use it more elegantly. And the reason for that is the underlying demand for the usage of AI just seems to be very, very huge and is overwhelming the scale and the ability for DeepSeek to use DeepSeek and DeepSeek-like entities to use it more elegantly. So I think both of those are going to continue. We're going to have more heft, more data centers, more power into that. We're going to get cleverer at using kind of the various chips, the bits and pieces. But the underlying demand just seems to continue to, and it's not even marginal, right? I mean, completely smash through expectations, and that continues to be, of course, like the story, I think, for the US and elsewhere.
So how do you position for that story, which, as you allude to, seems to have a lot of potential, and we're just at the early innings?
I think you stay bullish. So, look, we've been overweight US equities through 2025, even through various kind of scary moments. We can think back to April Liberation Day. You mentioned we've had some geopolitical kind of news flow in the last few weeks. We need to stay, we think at BlackRock Investment Institute, we need to stay relentlessly focused on our core convictions, megaforces as we call them, and artificial intelligence is one. So we're not trying to be blinkered and blind to news flow. Obviously, we need to be mindful. But let's try and stay very focused on what we believe to be true, like really true, and the AI megaforce is one, and those big American companies continue to be front and center in that story.
What about the big Chinese companies, Ben?
Also, you're right. That's a good check. It isn't just the US companies. I guess they get all the glamour and kind of the news, and there's reasons for that. But you're absolutely right. Here in Asia, we have a gearing into that in different parts of the supply chain. And in China, they've got some really clever companies. So I guess one other point from the DeepSeek moment was a reminder, perhaps of the obvious, that Chinese have many brilliant people, engineers, and will be, of course, competing very heavily in the AI space. So the China tech story has gone very well. And when we look at the global valuations, yes, those China tech companies have done pretty well, but they still look relatively cheap versus global peers. So, Avril, to your point, yes, they would absolutely be part of that AI megaforce from here.
Is that megaforce lift all boats sort of narrative? Because you see all of these indices in different countries. For example, South Korea right now, record highs. And of course, SK hynix, Samsung, all playing to that story. You have Taiwan. You have some of those chemical makers here in Japan as well that play into the semiconductor game. But then you have the commodities heavy, for example, Australia. So are we going to see a divergence?
A bit, yes. So I think it's some boats more than others. It's a big tailwind for a lot of kind of parts of the economy and market. But we are highly focused on the CapEx build out. So we would have thought societally and from a business perspective, you're going to see more and more companies, governments, kind of everyone adopting and driving kind of macro productivity gains and kind of earnings positive stories. But that's still mostly theoretical, right? It makes sense. We're seeing a few kind of pieces of evidence here and there. But the bull story for now is the money flowing into building out the infrastructure. So that isn't just the chips. Chips are obviously very central. It's the energy architecture. It's the real estate, right? Data centers are a physical thing. So that's where we're hyper-focused, is not the theoretical, what can this do to society in 5 years? That's a very interesting conversation. But we're much more kind of, if I can say, boring and focused on the money, which is very huge and continues to be, as I say, driving positive surprises.
Positive surprises also perhaps from monetary policy, especially with expectations of Fed rate cuts, or could it cut the other way?
So actually, interesting, blending those two thoughts. We think AI currently is actually inflationary. So further down the line, could it be sort of a magic bullet, a silver bullet, which speaks to disinflation, productivity gains? Sure, but for now, it's just lots of money chasing relatively few chips, data centers, copper wiring, and so on. So actually, right now, AI, we think, is actually probably slightly inflationary, and that's a small kind of part of the broader question we have, which is how does the Fed deal with the genuine complexity it's facing? Because the dual side of the mandate are pointing in different directions. Growth does seem to be slowing a bit, but inflation's a bit too high. So we think we're going to see some cutting. That's going to be great, but we're a little bit nervous that maybe the Fed can't deliver as much as the market is hoping for, because inflation is still a bit high, and that's maybe before we get the consequences of the tariffs feeding through. So we're still a bit nervous about inflation, but they will start cutting probably next week.
Ben, what does this mean for the curve steepening trade that has been popular among macro traders this year?
Yeah, it's gone really well. So we continue with our preference for kind of shorter duration over longer duration. You're absolutely right, Avril. That's obviously moved a long way, and we're thoughtful around it. I do want to stress, though, in the kind of medium picture, we still think term premiums should continue to rise, driven by the uncertainty that we're facing in many dimensions as fixed income investors. If you buy a 30-year bond, the uncertainty around fiscal policy, the inflation outlook, interest rate policy, it's just very high today versus what it was during the Great Moderation. So that uncertainty we should be compensated for as investors. That's called term premium. It's gone up a bit. We think that's going to continue. So in the round, we're still a bit anxious about the longer end of the curve in the bigger picture, because we think term premium should go higher.
Okay, so a bit more to go on that trade. Ben, thank you so much. Fantastic to speak to you. Ben Powell, Chief APEC and Middle East Investment Strategist at BlackRock. Now, in a developing story that we've been bringing to you this morning, the Trump ally Charlie Kirk, who was shot dead at an outdoor event at Utah Valley University. And of course, we heard previously from the FBI Director Kash Patel that the subject in the murder, or the suspect, had been brought into custody. We're since hearing that the subject that was in custody has been released after interrogation, and that investigations to continue. And of course, this is a developing story, as I said, that we'll be bringing you more details of as it unfolds. More ahead on the Asia trade. This is Bloomberg.
UBS says Switzerland's overhaul of its bank capital requirements handicaps the competitive advantage of local banks. Speaking with Bloomberg exclusively, CEO Sergio Ermotti says the banking regulation debate is a huge distraction.
We do accept that there is a necessity to fine-tune many aspects of regulation in Switzerland, but on capital, I think the requirements that are proposed are excessive, and they are not really targeted to address what happened at Credit Suisse. So we are engaged in the public debates, and in the next few quarters, we will see some outcome of the political process.
Shrinking the bank is not something that you prefer. You know, that the franchise is Swiss-based and your global franchise gives you that competitive advantage. The reason I frame it that way is I wonder, and risking oversimplifying a complex issue here, does the regulation in some way handicap the Swiss competitiveness when it comes to banking?
Well, of course, when you have a proposal that would see our bank having to hold, 50% more capital than your competitors, then of course you would have an impact on that. But it's difficult for me to see a successful global organization that is very close to clients, that is very resilient and strong in terms of capital, embracing a strategy of shrinking as a good way to succeed in the future. So we are very focused to keep our global footprint.
The message you would give to investors, clients, employees that, hear this almost on a regular basis, concerns around the bank shrinking and whether or not that's fully under your control. What is the message that you're able to give at this point in time?
Well, I think that we and the board of directors and the executive board are very determined to continue to execute our successful strategy, and shrinking is not an option.
How about the headquarters, the conversation there?
No, but we want to continue to operate as a successful global bank based out of Switzerland.
The management committee and yourself wouldn't be doing the job if you weren't planning for Plan Bs or Plan Cs. And not to speculate, of course, but what are some of the worst case scenarios that have been gamed out in the event you need to start entertaining some of these options?
Well, the worst case scenario is quite clear. It's already on the table. So I think that one is a scenario that we will need to evaluate and understand, but is definitely too early to jump on commenting any potential scenario and what our responses will be. Of course, the requirements as they are very punitive and excessive, and therefore we would need to think about how to protect our shareholders and our stakeholders' interest.
Understood. And I think just to clarify that point, because in my head there are two things here. It's either you set aside more capital or the headquarter question. I know that's oversimplifying the equation here, but do I take it then that you would rather put up more capital than move the bank out of Switzerland?
No, I mean, look, our preferred option is to have a reasonable outcome of this regulatory changes that is addressing the true lessons learned from what happened at Credit Suisse, and not simplistic options. And we want to continue to operate out of Switzerland based on that kind of regime.
What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum.
UBS CEO Sergio Ermotti speaking exclusively with Bloomberg's David Ingles in Hong Kong. And as we were just hearing there, that the true impact of tariffs might not fully be known yet. Against the backdrop of all this, the U.S. and South Korea's investment pledges into the U.S. Yonhap telling us that South Korea has confirmed, meantime, that detained workers in the U.S. will leave on Thursday and without handcuffs. Officials have earlier sought assurances from Washington that workers will be allowed to leave without restraints. For the latest, let's bring in Seoul Bureau Editor Denny Thomas for us. So, Denny, what exactly are the assurances that South Korea is seeking? And what more do we know about when these Korean workers can return home?
Yeah, so I think one of the biggest assurances South Korean companies and workers want is that they can have the proper documents and in a timely manner so that they can work without any restrictions in US. That's number one, which was not happening, and that's the reason why I've seen a lot of companies have used shorter-term visas like B1 and ESTA to get into the country and work. And that is where the gray area is, and that's where the crackdown has happened. I think very clearly South Korea, the government and the companies would like to see a smoother path to visas so that the committed money they are going to bring into the country is spent in a timely manner, and which is what their shareholders want, which is what the country wants. So I think that's the biggest assurance they want. What they have discussed and what has been the outcome is not very clear, but I think in the days when the foreign minister returns, we'll hear more about that part of the story. In terms of the detainees coming back, I think without handcuffs, that's going to be a big relief, because I think, as we discussed multiple times in these programs, people were shocked beyond imagination when they saw these ICE raids and these detainees, handcuffs and put into buses. So I think people coming back with more dignity, that will be a huge relief. But I think this is something that is going to be remain with South Koreans for a long time, and there has to be more diplomatic efforts underway to make sure that these kind of things are not repeated, and that's one of the assurances South Korea will definitely be wanting.
Yeah, because these are skilled workers that we're talking about, right? So what are the implications for Korean companies that are going to invest in the U.S. and trying to send these highly trained workers to actually work in the U.S. if they don't get these assurances from Washington?
Clearly, and that's where the gap is going to set in, right? I mean, you have projects that has a timeline which needs to end in a particular time, but if you don't have the required skilled, technically skilled people on the job, on the ground, you cannot push ahead with the projects. So the basic investment in people and technology has to be there in these high-tech industries before you can bring in the local workers to continue the work. But I think the initial phase of the investments do require technically skilled people to be in the country, and if that is not happening, then clearly these committed investments are going to take a long time to come in, and these projects are going to be delayed in longer term.
We'll be watching for any mention of the U.S. alliance when President Lee Jae-myung speaks today for his 100 days in office. Denny Thomas, good to have you with us, Bloomberg Seoul Bureau Editor. We do have more ahead on the Asia trade. This is Bloomberg.
This is a dark day for our state. It's a tragic day for our nation. I want to be very clear that this is a political assassination.
Utah Governor Spencer Cox speaking after conservative U.S. activist Charlie Kirk was killed during an event at Utah Valley University. The FBI says a person of interest who was in custody after the shooting has since been released. Kirk was a close ally of President Trump, who has ordered American flags to be lowered to half-staff until Sunday. Bloomberg's Jill Deasy's has the latest on this. So what do we know right now about the culprit? Any more people of interest at the moment in this investigation?
Well, really, Shery, I think, you've really just said it there. This is a really fast-moving situation. So at this point, what we do know from the FBI Director, Kesh Patel, he put out that the subject, this person of interest, has been released. I do want to make clear that when it comes to these types of really quickly moving investigations, when, the FBI or law enforcement take people into custody, that doesn't necessarily mean that that's, the alleged shooter or anything like that. This is obviously part of this investigation. So at this time, really all we know in terms of that latest is that that person of interest who was in custody has been released. And obviously, we continue to follow developments, and we'll have to continue to see how exactly this shapes up with law enforcement, and whether there's anyone else that they take in for questioning, or whether there's any suspects that ultimately emerge.
Jill, what has been the reaction from both Democrats and Republicans on this?
So, Avril, there has been pretty widespread condemnation over the shooting from both Democrats and Republicans, though obviously this is an incredibly politically charged situation. Charlie Kirk, he was the 31-year-old founder of Turning Point USA, that was a very expansive, influential conservative organization that was particularly targeting activism for young conservatives. And so he was at this Utah Valley University campus to actually give a speech on that. I believe he was talking about gun violence, actually, when this shooting occurred. He is a very controversial figure in that respect, and that he was obviously an incredibly close ally of Trump and the Trump administration, was a very big advocate for Make America Great Again, MAGA, the big Trump cause, but that obviously led to a lot of political divisions here. But again, I think you are seeing a lot of condemnation there, and certainly a lot of controversy following the shooting. Again, this is still something that really is only a matter of a few hours old, and we continue to follow a lot of these latest developments.
And of course, we'll see again this focus on political violence in the United States.
Yes, that's right. I think, you have seen, particularly in recent months, some pretty significant instances of political violence, of shootings. I mean, look, it was really just last year, just over a year ago, that you had an attempted assassination against, then candidate Donald Trump, eventually president, that obviously made incredible headlines there. So you are seeing these types of issues continue to evolve in the United States, and you are seeing, a lot of, really, really intense political division within the United States, and some of this has, obviously resulted in violence.
Jill, we're also hearing that the campuses at Utah Valley University will be closed from September 11 to 14. Jill, thank you for the latest on this developing story. Bloomberg Managing Editor Jill Deeses. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Let's take a look at how Asia markets are faring this Thursday morning, as we saw the Kospi hitting those record highs just a day ago, and it is extension of those gains that we're seeing in the session at the moment. It's really the tech names that are leading the charge on both the Kospi and broadly in the region as well. And a couple of tailwinds that we've been unpacking this week for tech stocks, including on Apple's products, Oracle, really showing that optimism for cloud infrastructure revenue, the outlook looking very bright there. And then, of course, in Korea, some of these policy reforms that have spurred investor appetite for stocks. So that is the Asia goings at the moment. But there are also some concerns, of course, of this divergence we could potentially see across APEC markets, especially the commodity-heavy sort of benchmarks, including that in Australia. You're seeing that mixed performance for the moment. But Shery, I guess, it's really all eyes on the Federal Reserve for next week as well.
Yeah, especially after we got those PPI numbers surprising to the downside. Now, one stock that we'll be watching in the Asian session, Nissan, down for a second consecutive session. The company welcomed the U.S. and Japan reaching a deal to reduce tariffs on vehicle and parts imports to the United States. Challenges, though, remain in managing those levies alongside a costly business turnaround plan. CEO Ivan Espinosa spoke exclusively with us about the impact of tariffs and the progress of his restructuring efforts.
We welcome the improvement from the 25% to the 15%, but as you rightly said, it's still higher than what we were operating with. And what we're doing is continuing our efforts. On one end, we are focusing our marketing efforts on tariff-free products. So we have two big manufacturing sites in the United States, where we produce many Nissan products: Pathfinder, QX60, Infiniti. We produce Murano. We produce our front-rear pickup, Nissan Altima. So we have enough product to sell to our customers tariff-free, and this is where we're focusing our marketing efforts. On the other end, we are also continuing our efforts of resourcing some components to improve the tariff impact that we're receiving from some suppliers and tier end supplier impact, and we will continue the efforts moving forward.
Does that mean that you won't necessarily need to raise prices, and does that improve the demand outlook for the U.S.?
Well, we're keeping a close eye on what's happening in the pricing, and we will take any opportunity that we see coming. Nissan we are having a very quick follower strategy on pricing, so monitoring what our larger competitors are doing, and we will take opportunities as we see fit.
The Chinese market, very competitive. How are you faring, and what's the strategy there?
Well, we see, I would say, a prudent improvement, or what I will call we have prudent confidence. This is how we're qualifying it, because we have 3 months of year-over-year sales growth. We just launched our N7, which is a new energy vehicle that was designed, engineered, and is produced in China. And this car is helping us drive the performance up. So we have, as I said, 3 months year-over-year growth, and that's why we are prudently confident, because the performance is good. The market is very difficult, as you said, so we cannot, say we are already out of the woods. We still need to continue working, but we have more cars coming in the pipeline, cars that were produced, designed, and engineered with the Chinese customer in mind, and we are confident that they will keep us driving the success forward.
How are you doing on your funding plans? We understand that you were trying for yen 1 trillion when it comes to debt and asset sales. How much progress have you made?
Well, we raised recently around 850 billion yen already. So what I would say is that we are very well in track on the funding. This gives us a lot more breathing room to keep working on the Nissan plan, keep improving our performance, and we have a lot more runway than what we had several months ago. Yeah, and the good thing is it's showing the confidence of investors in the plan. The fact that they were ready to place this amount of money on Nissan is proof that the plan is solid. It's a plan that is robust, and that management, we were able of convincing the market with our strategy. Yeah.
On the details of how those funds are being raised, we heard about a syndicated loan coming from backed by the UK. Is that included?
Is not included in the 850 that we have raised already. Yeah.
But conversations with the UK are happening.
We're looking at many options all the time, and we'll let you know if there's anything to add later on. Yeah.
What could be the timeline for that?
At the moment, we are not in a rush to raise any more funds. We have, as I said, we have raised 850 billion yen, which is a very big part of what we had intended to do, and we are confident with this amount for the moment. Yeah.
What about asset sales, especially these offices here in Yokohama?
Well, nothing to add on that. We initially looked at many options, but we haven't decided anything. We are in Yokohama, and we will be in Yokohama always.
When it comes to the production here domestically in Japan, you are ending them in your flagship Oppama plant by 2028, right? Are we going to see any more closures or reductions here domestically?
Well, in Japan, as we announced, as I mentioned in the last announcement, we have finished with the vehicle production consolidation in Japan. Nothing else will be done on the vehicle consolidation side in Japan. We're still working on some other sites overseas. We announced also Cuernavaca, which was also a very difficult decision to do. But we are on track. We are almost done with the restructuring plan, and we are now in the stage of moving forward to the future, talking about product and launching all new cars here in Japan and overseas.
What happens to those plants, like the Oppama plant?
Well, we will see what we do to repurpose them in the future. Nothing to announce at the moment.
Repurposing, but not necessarily selling it.
We're open to many options. Yeah.
How's your partnership with Renault? The new CEO especially, he was saying he wants to see more partnerships globally.
Of course, I think, this time is one of the most exciting times for the alliance. From the outside, it looks like we are distancing from each other, but the reality is this is a time at which we are collaborating the most. We have so many cars coming. We started with the Renault 5-based Micra that we just launched, which was designed by Nissan, but is now produced by Renault. And this is just the beginning of several projects that we have been working on. And I've known Francois Provost for many years. We've been working together for quite a while. And we have both the same interest, which is keep building, win-win relationship between both companies and keep fostering the alliance for the future.
Nissan Motor CEO Ivan Espinosa there. We have more ahead on the Asia trade. This is Bloomberg.
The tech rivalry between China and the U.S. has been heating up, and nowhere more fiercely than in the AI space. Not a surprise, given its potential to boost both nations' productivity, competitiveness as well. Our next guest is one of the most prominent names in AI and is a keynote speaker at the UBS Disruptive Tech CEO Summit. Joining us from Hong Kong is Kai-Fu Lee, CEO at 01.ai and chairman at Sinovation Ventures. Really good to have you. Let's start off on your thoughts. How are things stacking up in this US-China AI race?
Well, in terms of the models and the technology, China is 3 to 4 months behind the U.S. and it's tracking. And in terms of applications, I think both countries are developing very quickly. U.S. is probably monetizing better. The companies are worth more, and that will give the American companies more capital to build more. But China has shown that necessity is the mother of innovation. So with less resources, less capital, China has actually managed to catch up both in technology and in execution. So the one interesting new difference is open source versus closed source. Because of the American business models and the rivalry actually among the American companies, to first reach AGI, everyone is keeping the model very closed and inaccessible to users. So the open source, I think, is becoming a new trend. More and more companies want it because you can have the model, you can modify it, you can use it, you can trust it, you can host it on site. And actually the open source models are being led by China right now.
In terms of some of these global AI firms, you say China maybe 3 to 4 months behind, but what is your sense of which ones are doing a better job at monetizing things?
So far, the American companies got a head start, and I think American businesses and consumers are much more willing to pay for a subscription or SaaS and other kinds of fees. So the American companies are monetizing better, and that's perhaps because there's a head start. And Chinese companies have always done great in applications. WeChat is much better than WhatsApp. The Chinese taxi hailing services, grocery delivery services are better than the American ones. So I expect the Chinese application developers over time will catch up. But the Americans are ahead in monetization right now.
Will this be the year of AI apps, and does that mean really success for those Chinese firms that you talk about? And when it comes to commercialization and monetization, given how ruthless competition is in China, do you expect to see more consolidation?
Well, in applications, no, because when mobile revolution started, many companies built interesting applications. ByteDance, Meituan, Pinduoduo, Didi have all become very valuable companies, so there will be many opportunities. Consolidation will probably happen at the model level. Either China or US will end up with anywhere between 2 and 4 top models because training models are just too expensive, so that will naturally consolidate.
How challenging is it for smaller AI companies in China to prosper, given the funding situation and that they're also blocked out of US funding because of all of these restrictions?
These are definitely substantial challenges, but as I said, necessity breeds innovation. So in my company, as an example, in 01.AI, we're focused on creating value, making AI agents, and building a consulting workforce to help companies after digital transformation to reach AI transformation. It's our belief that if there's a strong value proposition, companies will pay, whether in China, US, or in other countries. And I think being pushed and forced to essentially break even faster, I think is an interesting way that puts pressure, but also may create valuable services that leads to companies that are actually profitable earlier. Unlike the American AI giants are all burning tens of billions of dollars with no sight of profitability in sight.
It's also about how China has been preparing perhaps the workforce and skills towards the AI sector. What are you seeing in terms of that?
Well, I think the biggest revolution we're seeing is, we started with the ChatGPT type of AI that can converse and write. Then we have reasoning agents that can think and reason and deduce. And now we have AI agents that can do and create business outcomes. So that will certainly put pressure on companies and workers worldwide as AI can do more and more tasks. And it's not just generating a document. It's getting something done, right? For HR department, being able to do recruiting for you, for the legal department, being able to scan and approve legal documents for you. So that puts a pressure worldwide. And interestingly, the pace for changing the future of work is a lot faster in white-collar work, which is, of course, global, but perhaps more U.S. and India, which does a lot of outsourcing. China still is largely a manufacturing country, so the blue-collar work, we're not seeing anywhere near the speed of job replacement by AI, because you got to make robots and work in the supply chains and different factory environments. Every company is different. So actually, I would predict that challenges to work will happen in the U.S. first. First, because of the white-collar revolution, AI revolution will happen first. Secondly, American workers are paid more, so companies are more incentivized to go after the job displacement. I think China will face the same issues, but a little bit slower.
When it comes to the AI evolution and development itself, given what you say about how China is really focused, of course, on being a manufacturing powerhouse and how that's how it developed its economy, does that give China a special edge when it comes to really collecting the massive amount of data needed in order for AI development, given that this AI competition globally is not necessarily a one-size-fits-all kind of scenario out there? What are the benefits for China of having this base?
I think actually China's benefit in being a manufacturing country is that the supply chains go to China, come from China. That really hasn't changed that much in the last few years. And having that supply chain benefit and having access to lower cost labor and materials helps China to push farther ahead in areas like robotics and advanced forms of humanoid robots and embodied robotics. That said, the U.S. is ahead in all of these technologies. China is just faster to market and much, much lower in cost.
And going back to your point about open source versus closed source, it's come a little bit counterintuitive. The DeepSeek may have gone open source and perhaps eased some of those concerns around Beijing's tight control of information. Will that help in the development of Chinese AI globally and the acceptance as well?
It already has. DeepSeek and Alibaba's Qwen have both gained a lot of traction globally. These are the top 2 performing open source engines in the world, and there are others from China. The American open source is well behind. So while the whole world may or may not want to use Chinese software, the fact is that open source, the models are available for you to take without charge to do whatever you want. And you can remove anything you don't want, add anything you need. And that flexibility, openness, actually gains trust. In many American universities, the students and researchers are using Chinese models, not because they're Chinese, but because they're open. And I think the interesting situation is that when you look at model U.S. versus China, is actually not so much who's better, because 3 or 4 months isn't going to make that much difference, but who is open and who is closed. And the American business models and their aspiration for AGI and their need to raise ever more money makes it rather difficult for them to open source their best models, and they haven't.
You've been alluding there to how the decoupling between the US and Chinese AI has, in a way, been beneficial for Chinese development. But how do you think this decoupling affects the entire AI ecosystem and consumers, users of it as well?
Traditionally, the Chinese users have been the first to embrace and adopt technologies, and that has led to China being faster in mobile and earlier AI revolution. But this time things are a bit different because US developed ChatGPT first and educated the market first. What we are seeing now is after maybe almost 2 years after ChatGPT was launched, or a year and a half, with the launch of DeepSeek, that has really educated the market. So I think people are excited now about the chatbots, the LLMs, and the agents. So I think the China market will grow very rapidly, even though it started perhaps a year and a half later than the American market.
And also a lot of excitement over embodied physical AI. Is that the next frontier?
It's definitely one of the next frontiers. I think we should see a lot of usage of these robots. Keep in mind, they're rather expensive. So it's also possible that when China reduces the cost, in this case, not just by a factor of 20-30%, but a factor of 5 to 10, as we're seeing companies like Unitree really building American quality robot at a fraction of the cost. I think that may actually make the usage scenarios happen faster in China. And also, the use of Chinese robotics is not something that's currently affected by the geopolitical pressures. So I think the robotic companies that Sinovation has funded and also other companies we have not funded, we're seeing quite a bit of successful export business to other countries because the Chinese robots right now has a quality parity with the top American robots and a dramatic cost advantage.
Kai-Fu Lee, really enjoyed the conversation. Thank you so much for your time. CEO at 01.ai. They're joining us from Hong Kong. We do have more from the UBS Disruptive Technology CEO Summit. We talk biotech with Hummingbird Bioscience. Plus, VC firm 3CAGI tells us what investment opportunities they see in Asia. Do keep an eye on SoftBank in today's trading session because we're seeing big gains. We're talking about gains of as much as almost 8%, the most since mid-August. And this, of course, as SoftBank-backed Klarna jumped in their opening trade, raising more than $1.3 billion in their IPO. The financial services company shares rising as much as 43% at one point overnight. We have more ahead on the Asia trade. This is Bloomberg.
In a developing story we've been bringing to you all morning, the shooting of Trump ally and conservative activist Charlie Kirk. And we are since hearing from the U.S. president himself saying that he's filled with anger at the heinous assassination of Kirk. And he made these comments in a video that he posted on Truth Social. We've also heard, of course, from the FBI director that a person of interest that was taken in custody over the killing of Charlie Kirk has been released, and that investigations continue. Kash Patel also said in an X post that they will continue to release information in the interest of transparency. And of course, we've been hearing how Charlie Kirk was killed at an outdoor event, and this was before a crowd at Utah Valley University when a single shot was fired from a nearby building, and that's according to local police. And of course, this is, as we've been mentioning, a story we've been tracking all of this morning. In the meantime, looking at markets as well, Shery.
Yeah, we are watching U.S. futures at the moment after stocks gained to record highs in the overnight session. Of course, AI trade momentum continuing with Oracle's jump, making Larry Ellison briefly the world's richest person. So tech stocks in focus in the Asian session, especially the AI-driven momentum with the likes of Alibaba, for example, because Alibaba is also seeking $3.17 billion in this year's biggest convertible issue, really raising the funds for purposes including scaling up their data centers, international commerce expansion as well. So we might be seeing some sector rotation towards underperforming sectors. So do watch out for that trade across the Asian session, with A50 futures finishing to the downside of 0.25%. That's it from the Asia trade. The China show is next. This is Bloomberg.